Yes, man. What's going on? Check out Twtr. What's up, man? We're looking at Twtr. It's money flowing. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. It's right out of the money flow. Very first page, actually, page 1. Driven by recursions, fractals are images of dynamic systems. The pictures of chaos, geometrically they exist in between our familiar dimensions. Fractals or patterns are very familiar. Since nature is full of fractals, for instance, trees, rivers, coastlines, mountains, clouds, seashells, hurricanes are all have abstract fractals. So it means it's a repeatable pattern in that it forms a pattern, man. And you can see it. And a lot of life is just patterns, man. What's up, Manny? I don't know if I've ever seen you on the YouTube, man. So we know that if we can bring order to chaos, hopefully we can bring some cash out of that, man. Success is always organized chaos. The world and universe are perfectly balanced. The planets never collide with each other. Roots of the trees are always just long enough to stabilize the trunk. The sun never gets too close to the earth, and the rivers and streams always lead into the sea. Fact is, nature has a very crafty survival system. It's a system that eliminates the weak from gaining too much power and authority. To protect itself, nature purges itself if anything can't handle the pressure, people included. So, with the money flow, I'm looking for this fractal pattern of price moving up. And in a perfect world, if you know what I'm looking for, these extremes on the whatever oscillator you might be happen to use. I used to use something different for the RSI, actually. But whenever I'd get an RSI extreme move to an extreme move in the past, meaning looking back, they say past performance isn't indicative of future results. No, it's not, and yes, it is. Okay, no, it's not perfectly, but, it is very repetitive. And as a trader, if there isn't some sort of repetitive pattern, you're not really trading, you're guessing. And so as a trader, we have to kind of figure out some sort of repeatable pattern, at least that we can see. Maybe your brother can't see it, maybe your neighbor can't see it, but you can. And whatever that is, it's a combination of this, that, and the other. For me, it was this. I would basically look at 6 things. I would approach the market every day. And first and foremost, for me, even if I was trading, I want to make sure the shit I'm trading is valuable, or at least valuable to someone, right? So we need to kind of understand what the stock is. Now, I'm not a big fan of the fundamentals of Twtr, but people smarter than me, if we go to Morningstar gives this damn thing a 4-star rating. And now, I wish they'd have updated it sooner. That shit says October. Need to dig into this. This thing even got me signed in. I'm sure they've updated it since October. Hold on. Anyway, they're giving it a 4-star. Now it shows October. $54 value. This is where we started selling it before. And you say, what do you mean? Well, $54 is right here. And I want you to look at where did the RSI or CCI or suggest, whatever you want to use for an oscillator. An oscillator measures velocity of price, it moving from one place to another. How fast. We in football players, we measure 100-yard dash. We measure, how far can they throw or how fast can a baseball, like the measurable things. One of the things we measure in stock movement or in price movement is how fast does it do it. And that's called velocity of price. That's what these oscillators are doing, like the RSI. And so it went from an extreme low over here to an extreme high. And in my world, that's a completed move. Meaning I'm thoroughly expecting it to then go into a stage 3, come down, and set up to do what? Money flow again. And so it would move through this pattern. Sometimes perfectly, and then sometimes not. And that's why they say past performance is not indicative of future results, because sometimes it's not. And that's why they feel the need to tell you that. That doesn't mean it can't be an advantage. So Whoa. What happened there? A little bit of fuckery. So what we're looking for, let's clean this up, man, on Twitter. We got Morningstar giving it a $54 fair value. Seems hard to believe, but it is. This has nothing to do with Elon Musk, by the way. We were in this before. This is a stock that I like to trade. So I track Twitter, and when Twitter sets up like this, I want to own a lot more Twitter. And when it sets up like this, I want to own a lot less Twitter or out of it. It's just been the strategy. That's trading, right? That's trading around a position, or maybe call it, some people might call it, I don't call that swing trading, or position trading maybe, or we're moving money around the position, and you may look to get out and let it set up and get back in, then look to get out, that would be purely classic trading, right? So we have an anchor point. We have a lowest low, right? And that's held. It's held. We can draw it sideways. That's held. So meaning we're waiting for a stage 1 to form. We've had that. Price is above the 5-day moving average. It's gone sideways. It's built out this box. Let's clean this up. So as I'm looking at the money flow, I'm looking at this, and I'm like, okay, where are we at? All right. I mean, it looks like a 1. We came down. We stopped. We've been drifting sideways. Not perfect. Up, down, up, down. Like we're building out that base. And now what am I looking for? I'm looking for price to get above the 20. Now, it's just drifting, so it's not with like any ferocity here. It's just slowly gotten above it. Same thing, same effect we see going on with Bitcoin and a few others. Like it's just, or not Bitcoin, I was on a 4-hour chart on Bitcoin. But so as a trader, if I'm swing trading this, Twitter, my zone is this previous high. Because price has memory. Price can go to where it was before. That's how you get support and resistance. Meaning it stopped there before, stops again. Do it 2 times, now we got a fucking point, right? We draw from point A to point B, now we do it 3. Now we're building a stage or support. And notice what happened here. It doesn't have to be 3, but when you get 3 like this, what are you doing? You're building out the stage for the eventual rollover. Does that mean it's done going down? No, just temporarily. It's money flowing. It's going sideways, rocketing up, all of a sudden profit. You know, you can come up with a reason. Well, why did it stop going up? And if you remember when it was doing this over here, a lot of people say, well, hey, man, Elon's going to, I don't know about Elon. I know about the RSI. See, RSI was here before Elon. And before all of their shenanigans, this was working. So I don't need to know about him. I need to, when it hits that, I start taking money off. We don't know if the deal's going to go through. We don't know. But here's what I do know. The money flow's doing this, whether Elon's playing or not playing, price is moving, right? Come on, man. And all of a sudden, we have a position that's outside of that, man. I don't get pulled around by what that guy's doing. Now, maybe the reason it goes up is because of what that guy's doing, but that don't have anything to do with me. I'm not trying to game him, man. I'm trying to play me. Meaning I'm trying to play my game. I want to be ahead of that, man. I don't want to be chasing that, right? So that could be a catalyst. That could exactly why it goes to 52. Maybe they work it out. Maybe they don't. Maybe you don't need him at all. Maybe it just drifts up. I don't really need to know. I need to know what is the value of the company. Now, TipRanks has a $51 target on it. And that's still a hell of a lot higher than we are now, right? Which is my zone, the $50 zone. So we've got fundamental backing for this money flow trade, for this pattern to work, for it to have, it's come down, now it's gone sideways, right? Remember we took off up here. I wonder if I still got that on my feet. When was that? April 11th and 12th. What are we thinking here, man? Let's go to Peter's. What's up, Carlos? I bet we don't have it, do we? Ooh, okay. Here we go. 418 trimmed Twitter. And then 425 selling more Twitter. All right, so we got 2 days here. I thought I had another one. The 18th and the 25th. Let's pull this up and see. Clean this up, man. What is wrong with you, man? Clean up your room. Let's see. Where's the 18th? It's right here. have swore we sold more. What day is this? The 5th. 4th and 5th. So we sold in here. I gotta go back and check my text. Selling more Twtr. Because on 625 I say selling more Twtr. Selling Twtr. But we're definitely selling Twtr into the stage 3. It's hard for me to believe I didn't sell on the 5th. I don't know. We'll have to go see. I gotta go check my text messages. We'll have it archived. Either way, we're selling into the 3. So now what? Let it come in. I'm looking for it to set back up. It's above the 20, but it's not running, right? So we're not breaking, but it's getting there. So for me, if I'm going to trade this, I'm looking to establish a position in Twtr. This is my anchor point. So as long as this holds, this 35 range, which look, that's a bit away, right? Maybe you're not comfortable with that far apart, man. But that would honor, I mean, if it stays in there, man, that's within inside this parameter of this stage. So I want to make my position large enough that I can understand that, I can withstand that. That if it comes down in here, it's basically in. Now you could run it tighter. I'm just showing you what I do. As long as it stays above here, I'm going to assume this we're staying with this stage here. And as of right now, it looks like it wants to break to the upside. It's turned red right now. No, now we're back to black. Look how we're doing it. Red, black. 39.41, 39.28, red. That's what we're doing. We're just sitting here tinkering with this, man. I know you guys want like your little wedges, little triangles. There you go. There's your little girly triangles. There's our triangles. Our target, previous high. Our fundamental target is from between $50 and $54 is a fundamental target based on Morningstar, The Street, Yahoo, and tip ranks. Everyone has a general consensus that the company is worth this. Now here's the problem. If the S&P 500 doesn't get going here, so let's pull up the SPY. This is the wind at our back, right? We talk about the wind. Oh, baby, it looks like it's about to go. So look, what do we got? We got an anchor point. We did some videos on this. What do I need? 4 days. 1, 2, 3, 4. Am I above the 5? Yep. That's the stage 1 buy signal right there, man. That day. Now we're above. So we're building out this stage. Now, are we being aggressive? Yeah. So as an investor, that's what I like to go after. You're like, well, what if it's not the bottom? Oh, well, it's pretty damn close. And if I can do that every time in an investment where I'm just always banging what appear to be bottoms, then as a general rule, that's just a damn good strategy over a long period of time. Now, trading, we're going to have stop losses. And we could both be looking at the same thing. An investor could be stepping in and going, man, I need to load up on the SPY. And a trader could be like, damn, looks like the bottom's in. I need to get in a position. And we would both have a criteria that, you know, the one is I'm not getting out, I'm accumulating. The other is, well, I'm trying to make fast money with this capital. And so you're going to have to put in some sort of protection in there. You know, that's in the purest sense, that's trading, man. And we could both be coming at the same thing. And I might be thinking, well, I want to sell this up into the 50s because that's what I think it's worth. And so I like to buy shit undervalued and I like to sell it when it's fair valued. Is that investing? Not in my opinion. In my opinion, that's position trading, meaning you're picking up an undervalued asset with the plan to flip it down the road. Well, we can see the money flow pattern would get you there pretty quickly. $39 to $50. And in the 50 range, we're saying it's fair value. So if I'm position trading, position trade's over. You're like, well, I could keep it. Good. Now we're investing. It's fine. And if I'm going to keep it, I don't know how much I want in it if I'm trying to be an investor. Now, maybe you're like, well, I want that many shares of Twtr. I actually think it's worth 70. Okay. Then you can make that decision. So something like, let's say Uber, the problem is you want to make this decision when you're in it. We don't turn trades into investments, investments into trades. Like, get your shit together when you approach the trade and write out what is this trade I'm doing? Is this a trade then define what a trade is. I'm going to enter here. Here's my trigger. This is what I'm going to add to it. Here's my first target. Here's my stop. Write that shit out, print it, sign it in blood, stick your thumb on it, and then stick to it with discipline and consistency. That's trading. If you're an investor, guess what? You're just buying the one. And when it runs up, you're not buying more. It already ran. Like, you're not buying. You're only buying if it's on sale. That's what investors do. Now, you could just buy to buy. I mean, it's hard for me to get my mind around that. But, you know, that's one thing ETFs afford is you can just blindly buy things. I can't see doing that with individual stocks. I just can't get my mind around it. But I can understand it with indexes is you're like, fuck, I'm not trying to. But what if you did like indexes, but then you also like to buy even more of them when they were obviously cheap, and you had some way of determining what that is? Meaning you could look at a chart and go, yeah, cheap, not cheap. Cheap, not cheap. You know, it's still cheap. So let me show you what I mean. This bottom is buyable, 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 buyable. Stage one, stage one. See it? These are all stage ones inside of money flow. This is what will confuse people. It'll confuse them. All of these were buyable stage ones. So when I come to this, if I'm position trading this, not swing trading, not day trading, position trading, meaning I'm trading it to what I believe to be true value of this company. If this is still under it and there's still a reason to do business and things are still fine, I'm cool accumulating all of these stage ones. And I'm not buying a lot. This could take a year, 2 years. Maybe for 2 years I do this. And then it goes sideways. Then it starts to turn. Well, when it starts to turn, this one gets back. You get back to even a lot faster when you did this, okay? Meaning like right up in here, all of these start to, you've averaged your price down. Now you're back in the game. And yeah, maybe they have lowered true value. And over the next year, maybe you're wrong. And it never does go to $55 due to market conditions or mistakes of the company. Then your target gets adjusted. And you could make an investment that, I'm sorry, it's not worth what you think it's worth anymore. This is what it's worth. Like, shit changed. So you paid $5 million for the Mona Lisa. All you can get is $4 million. You can say, well, I'm just going to keep it then. I'm not. Okay, well, it's worth $4 million. That's what it's worth, man. And so the risk of being an investor and a trader is that. That is the definition of fucking risk. You lose money. Like, that is it. But just because price changes doesn't mean you lose money. I don't need to realize a loss. So if I have a portfolio of rental properties, prices come down. I don't care. I'm renting them. Bring them down. I'm going to buy more. So if I have no intention of selling Uber right now, if this is a 2, 3, 4, 5 year big flip, buy a Ferrari, then good. Bring it down, man. Bring it down. I will buy these ones and I'm going to use the money flow to do it. And when it rips and hits a stage 3, probably not selling any. Why? Because I know the play when I put it on. So I don't need to think when it runs up and tag, well, I should have sold. That wasn't the plan, man. That wasn't the plan. But it may be the plan. So on Twitter, a lot of people are in what were trades, they're now investments. That just means you did bad trading. Trading is losing. Like, we have to lose. Traders lose a lot, man. They lose a lot. Lose a lot. Dividend player don't lose ever. So when you hear Warren Buffett say, don't lose money, what he's saying to you is don't trade. You know that, right? That's what don't lose money means. He's like, don't trade. Because his account balance goes up and down with yours. Berkshire Hathaway drops by 50% a bunch of times in Warren Buffett's life. Many, many, many times. And first time that happens to most people, they have a problem. But it's happened to him many, 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 many times. And he's one of the greatest investors of all time. And Berkshire Hathaway has come down many times. Meaning his investments drop. And don't lose money. That's what he's saying. Don't trade shit. And yet he loses money. He lost money on Delta. He lost money on ConocoPhillips. He lost money on Kraft. He's lost lots of money, man. But it's still the rule, right? Like, I don't want to lose money. So the way you don't lose money as a trader when you approach this is somewhere in here. If you're going to swing trade this, which Twitter is a great one, it's such an easy pattern. Look at this. 1, 2, 3, 4, 1. Now we're 1 quasi going into a 2. Maybe we come down. So if we're trading it, we got to decide where we're putting our stop. You don't even have to put it in, but you got to commit to it. Meaning if it comes there and it tags it, are you getting out? Or are you waiting to the close? What are you doing? I mean, are you getting out if that's hit? You make that decision. That's your stop. That's your stop. And then up here, right around up in here is our target, right? Or it hits RSI first. It'll probably hit up in here at about the same time. Meaning the RSI is going to go extreme, probably about where this would be. And we'll be back into new, fair value, and they'll be back to talking about Twitter in the news, and they'll find a reason to bump it back down, or maybe a deal goes through and it pops. I don't know. That's Twitter, man. I hope you guys appreciate that. This is just trying to catch, what we're seeing here. We're seeing a stage 1 start. It's becoming a 2. Price is yesterday on Friday did break above the 20. And if we go look at where's the wind now, where's the S&P, it's looking a lot better right now, man. It could pop. How far is it going to go? No idea, man. But look at it. It wants to go green. I bet we go green today. We're going to go green into the close. You're going to see stocks run. And if you're short, you got a fucking problem. And so those people start to maybe cover their problem, which gives it a little bit of momentum. And then new people come in, and then day traders, and like all these people start to come in for different reasons until it hits a force that decides to turn that momentum. So whatever's happening just tends to keep happening till something hits it, man. Like Newton's law of motion, it just keeps going. Uptrends keep going up. And stocks just climb a wall of worry until something hits it and turns it. And we're right here at the 20. So if this gets above this green line, which it should today, I imagine we do it today, we're going to run to this 415. That's the money flow. I assume that it's going there. It'll run to this 4. It's not me predicting price. That's the money flow. And it'll stop where it stopped before. And then we'll see as it push through. And then it, the next target, and then the next. And then we'd be being a full-blown uptrend, which would fuck everyone up, which would be beautiful. I mean, imagine all that. That's a big, look at, we just went red or green. You got a big problem when all of a sudden the market's ripping, and every idiot on YouTube's been saying we're going down. All of a sudden it changes just like that, man. Now we're headed up. We'll see. We're pushing on the 20, but look where we stopped, right at the 20, man. I don't use the 20 for nothing. This is a very, very, you'll see when price gets with it, the 20 is a big deal, getting above it or below it, man. And how far it gets away from it, and you'll see it may pull away from it, but it gets drawn back to it, It gets drawn. You could probably say that for a lot of moving averages, but it does on the 20. There's something about it, man. It pulls it, and then it pulls it back. And if it pulls down, it pulls it back. And if it pulls it back. It's constantly pulling itself back to that 20-day moving average. And as a general rule, if it's above it, we're drifting higher. And if it's below it, we tend to be drifting lower. And that's the general direction of the market. It's not perfect, but it's just one of the 6, pieces of where's the RSI, where's MACD, where's the 5 to 10. So we're using all of that to help us draw the picture of the money flow playing out. And sometimes it'll play out picture perfect, like we're seeing with Twitter right now, where you see the pattern picture perfect, man. USA has money flow pattern sitting right. Let's see. What is it? What'd you say? Oh, UA. Oh, bro, we're going Under Armour. Yeah. I'm just not a fan of the stock, man. I'm going to be honest. But yeah, it's trying to break here. You got stage 1, day 4. Yeah. What does Morningstar think about this stock? Man, God, they've had so many problems. They got it on a 5-star, man. So undervalued by 50%. Yeah. I don't know. I'm in Haynes Brands. Not quite the same. Similar play. Yeah. I don't know. I see it. I see what you're looking at. A lot of upside potential, man. Haynes Brands throwing that big fat 6% dividend yield off, though, man. It's hard not to play. Do you have any energy transfer? Of course I do, man. Of course I do. So if we come over to ET, if you ever want to see any of my buy and holds, just come over here. If you go to page 18, they're all public, man. Now, I'm not, I don't sit I put in the Discord group when I make moves in them, but these are the ones that I'm holding. And they almost never come off. I mean, it's like an act of Congress to take one off. Coming off isn't, it's which one are we adding to is usually the deal. I haven't started adding to energy yet. These are stage ones though, and if I didn't own any, I would. I was telling a kid yesterday, he's like, would you buy ConocoPhillips? And I said, me, no. I've got $100,000 of oil stocks here. If I was just getting started in the stock market, hell yeah. Hell yeah. This is the money flow. This is when you're buying it, right? Has price ever stopped here before? Yes. So there's one. You know, can we see the pattern before? Yep. See it, right? So this is building out what? A possible stage one, right? Do we got an anchor point? Yep. How many bars we got? 1, 2, 3. You could technically borrow from the other side. Boom. This is bullish. I'd buy it. But, I mean, I don't know. I feel like the stocks are priced fine here. This is my problem. Like, I don't feel like these are a value. What do they think Conoco's worth? Yeah, see, Morningstar says COP's trading at a range we considered fairly valued. So that's why you're not seeing me add to these. I don't know that we can say that about ET. So you're not going to see me adding to oil here on this pullback. I'll be much lower and I start to add. So ET they have as a 5-star. They say is undervalued by 42%. So MLPs are still undervalued. So if I'm looking at this, do I want to buy Exxon? You know? Or do I want to buy ET as an investor? So if I'm looking at Exxon, yeah, it was 105, pulled back to 189. Now, as a trader trading momentum, I'd jump into Conoco or Exxon or Chevron. If we got a stage one, I put a stop, set my target, I'm trading it. But as an investor, that's not. Yes, I see the money flow pattern, but it doesn't make me want to do anything because it's not on sale. So I would be more willing to pick up, ET if it's undervalued this low and it's a stage one. So matter of fact, I want to buy all stage ones of this, right? Until we get close to what? Fair value. And then I probably don't want to buy those. So these would all be buyable. Now, I wasn't selling any here. You say, why not? The RSI is extreme. That's a money flow sell. Yes. So as a trader, you're selling that. As an investor, and the asset's undervalued by 40% still here, 35, 40%, I'm not selling it. I'm just going to let it come in. And what am I waiting for? This. I'm waiting for this so I can buy more. Why? Because I want to be selling this if I'm, as an investor or a position trader at true value, like down the road, man. So I need a bunch of stage ones. I need pullback. So it changes the nature of the trade, man. So your exit is really, 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 really dependent on, are you trading, position trading, swing trading, day trading, options trading? What are you doing? That will determine stop losses, profit targets, and your time frame, man. Man, oh man. I've been nibbling on MMMP, JMV, my 3 top dogs. Thoughts on XLU long term? Come on, Mike. That's, of course. You want to buy this shit and hold it for life. So this is one we trade pretty actively. Is the UTSL. I didn't close it out when it moved against us. I know it may have freaked people out. It's a triple leveraged. It's going higher again. These are utility stocks. There's no need to panic. All you should have done is bought more. Like when it comes to utilities, there's nothing to worry about here. Even if they get out of whack for a minute, just let them get out of whack, pick up some more. They're going to go up. They're utility stocks. They're the safest form of passive income in America is owning the XLU. There is no easier way to get money doing nothing. People pay their utility bills, period, or they die. Like it's like a cell phone bill. So when you can buy stage ones on these, and this is why I like to trade the triple leveraged one too, because you get these huge run-ups when people want to buy income in. I was really hoping, this one got away from me. I didn't add to it. I was doing my little interpretation game. Anchor point, day 1, day 2, day 3, we're above the 5. Boom, there's our confirmation. We're not going lower. And I was just hoping for an opening where we came down into here somewhere so I could add to it, and we didn't. We just kept going. So my bad. I got a nice position in it. Ain't no big deal. I'll pick it up and add up in here, and we'll run up and tag these, and we'll start unloading it. And that's how we'll unload the XLU. We want to sell it into strength, accumulate it into weakness, hold it in the meantime, and wait for it to hit it, man. Yeah, man. Good one. XLU especially, but I wouldn't do XLU, man. You got Southern in there inside of the ETF. You got Southern inside the ETF. You got Duke. Look at these nice charts, man. I'm a stock guy. I'm not against the XLU. I just like the stock. So I own Duke, I own Southern, but if you're, trading less money, that is a way to get exposure to the entire sector, 100% for certain. Look at all these stage ones, man. All you want to do is buy these. And you're buying hold on this utility stuff. And you can almost ignore everything. You're just buying the bottom, dude. Look at this. Buying the bottom, ignore all this. Buying the bottom, ignore all this. We're buying the bottom. We're going to ignore all, or maybe we don't. Maybe this fourth time we're going to unload some. Did I blow your mind on a way to trade there? You're like, oh my God, Gerald, you mean over time you could just keep building and then dump a huge, you could do that? Yep. I waited for years to take profits in oil. I just kept building them, compounding the dividends, building them. Then it hit 6 figures after 6-7 years of that. Yeah, let's sell some. Give me 25 of that back, please. See what I'm saying? Like, you can take your time on that. That's a different way of trading too. But you won't be successful at that if that's not written out, thought about, planned out, and you're committed to it. Like, you don't get to change your mind because the economy changed. A lot of fair weather investors out there, man, or position traders, as in most people I know. So make sure you know what you're going to do. Decide it now. Decide in the good times what you're going to do in the bad. A lot of people start changing up. Well, oh my God, Bitcoin's, I thought you liked Bitcoin. Now it's coming down. Nobody likes Bitcoin. Fine. What's up with that, man? Let's see. Oh, everybody's in it. Oh, I'm going to buy it when it's cheaper. No, you're not. Nobody does. That's a loser's philosophy. I'm telling you. And I never see them do it, man. Either you're going to do what you've been doing. You're going to do what you're always doing. Now, if you're moving in and out like that, and on strategically on purpose, because that's your plan and that's what you're doing, and it's not about I'm sure you do that, but that's not what most people are doing. So Bitcoin's at 2074, stage 1. It's a buyable stage 1 here. Where are we at on the 4-hour chart? We're coming down, huh? We might be about to close our 4-hour swing trade. We'll see where it goes today, man. You guys be good. Appreciate you. Get clear, man. Get real clear on what you're doing. It'll make this stuff a lot easier for you. Let me look at shop real quick. Everybody's been asking about shop. Yeah. It's a stage 2 buy here, man. Look at this. You got a breakout. Yeah. This is a buy. Yep. Your stage 1 buys, though. About the same price too. I mean, obviously we're bottoming. You can see it forming here, man. You can see it forming. Just a big stage 1. Yeah, man. I like it. I like it. You guys should be all over this. It's expensive though, huh? And they're fixing to do a split too, right? So you get 1 or 2 shares of that. I think they're fixing to do a 10-for-1 split. After the price dropped 30% or 60%. I like it.